this one is a little special, not only because of Dave, but I'll get to that in a second, but because I like to make bold predictions. I do it often.
You do, yeah.
And I've been speculating a ton on, which it wasn't my fault. It was an election year last year. And we were being made all these promises about things that were going to impact the economy and the housing market. And then Nicole, the lady behind the camera, said, why don't we see which ones have actually played out and which ones kind of turned out to be nothing burgers, like the NAR lawsuit.
Yeah.
So that's what we're going to do today. But before we get into all of
Is
that.
this filtered to lopside in your favor, or is this like very objective? Just so we know. Is this good? Like, are these, is there collusion behind the camera and in front of the camera to make sure that your predictions have been fulfilled, or is it good? I just want to think that they're unbiased, okay? I just want to, I'm here to be the arbiter, okay? And your friend.
There is going to be a bias.
Okay.
Against one person.
And it's me.
No.
Okay.
Maybe you'll figure out who he is. Maybe you already have figured out who he is. But I'm not going to say it because that takes away the fun.
That's fair. Yeah, that's fair. I like that.
But the rest, I'll tell you what I was wrong about.
Okay.
Introduce yourself, for Christ's sake. And talk to the mic so they can hear you.
Do I come up here? So I'm Dave Lass. I am with Real Broker. And I joined Real last year. I've been a real estate agent actually only for like 2 full years. This is my, I guess,
I didn't know that.
halfway through my 3rd year, but I've been doing deals and it's been pretty good. It's been pretty good. I think I entered the market not at the most advantageous time, but screw it, you just gotta go for it. And it's been the best change in my life. I used to do conservation work, and that was a passion project in my 20s and 30s. And honestly, needed to make a little bit more money and be around for my family. I was traveling a lot, and this was such the perfect job for me. You get to use your brains, you get to use your brawn. Ultimately, you get to help people. Yeah, I'm like have poor boundaries with my clients. I'm like taking out garbage and fixing stuff, and like quasi handyman on the side. Hopefully, I got to stop that because I actually might get in trouble at some
Liability.
point. But full on. I can be a liability in multiple aspects of life, but that's a whole different podcast.
I'm learning this.
I
had no idea that you'd only been doing this 2 years. You actually know what you're doing.
I know what I'm doing.
Because we've done some deals together.
Yeah.
And oftentimes when I do deals with realtors, I'm less than impressed with what's going on.
I think I sold over 10 million last year, and if the market does what it's supposed to do this fall, I should match that or beat that. So
good for you.
I know. Yeah, why not?
Kicking
Which
ass and
isn't like
taking
crazy,
names.
but it's good. I mean, hard to say. I mean, good enough is not something I like to live by, but you got to have work-life balance, and that's a kind of the Goldilocks sweet spot for me. It feels like to where you can kind of be present on all aspects of your life.
I think that's a really important point because we in the real estate space, specifically for realtors, there's so much ego and posting of numbers, and it's on the loan officer side too, that it's like if you're not trying to be the one dominating the entire market, like you don't even have the right to exist.
Right.
But what you're saying is true because there is a whole piece of this industry that is about like having the flexibility and being present for your family and showing up in a way to your clients that they aren't just a number.
Well, that's the whole thing. I think it's actually those numbers, and I see people do it, and I'm guilty of it too sometimes because you get excited about it and you want to, convey it to the world. But I think it actually is counterproductive because people look and they say, "Oh my gosh, they're doing so much. How do they have the time for me?" And that seems like that experience has to be transactional at that point, right? So there's assumptions that some people make when it's like really high volume agents, and so some of that can bite you in the ass a little bit. And obviously, I'm like envious of those agents to a certain extent, but also not.
Yeah, you want to do business differently.
Yeah, for sure.
We don't have to talk about them because that's not the point. So Dave became a friend of mine, and the reason I thought I'd have him on the show because I've noticed that he's not scared to say what he's actually thinking. And I think, the best podcast guests are the ones who will actually tell you what they're thinking and not just stay within these like scripts. Mm-hmm. So feel free to speak out of turn.
Okay.
All right. The big picture this year. Did I cover everything on the first 2 slides, Nicole? Am I on track?
Yeah, you're good.
Okay. So, am I on the big picture slide? Why am I so confused?
Where am I?
The big picture.
Yeah, you are.
About rates being the star of the show?
Yes.
Okay, so I think this is going to continue for a long time because we're not going to see interest rates like do exactly what everyone wants them to do for a while. This morning we got more like weak labor numbers and interest rates are doing better. Yesterday we saw interest rates kind of give up 20 basis points because data came out on inflation. It's going to be a bumpy road, and it's not just going to be Trump wants lower rates, so we get lower rates, which I think is confusing to a lot of people because they're like, well, Trump is taking over the Fed, which we'll get to in a second, and so we're going to get lower interest rates.
Your live just ended.
What?
I have no idea.
Do you have to just go live again, or do you want me to come see?
You can have to, but it's just a new stream has ended. Uh-oh. Did my teacher kick me out?
Oh my gosh.
You did it more than you thought today. Good thing I'm recording on here.
Okay, so go back to events.
What happened?
Join live.
With your teacher.
Uh-oh. Okay, so we have to do it only for recording. Does that work, Nicole?
Yeah, that's fine.
That's sad. You know what we should do?
There's no live anymore? Yeah.
We can go live on Instagram. I don't know why. I've never had that happen before.
Neither have I. I wasn't even on that screen.
I just want to keep Dave on his toes of knowing he's live. Because otherwise he'll be like, oh, edit that out.
I feel that like it just got like way less anxiety. Like, let's keep it this way.
Sorry.
Please?
That's such love.
I'm gonna go snooze fest over here. You're gonna do it through your phone. Go live.
Yeah.
God damn it, Shivani.
No, you're still gonna. Nicole's still gonna record it to send it to everybody in horizontal.
Cool.
But I'm gonna go live from the circle on my phone, or I could go live on Instagram. More people will see it. Which should I do? Instagram.
Instagram.
Let's do it.
Insecure.
Right? MySpace.
He's like, what did I sign up for?
Did Lee actually have to take clothing off?
The funniest part of that is he didn't know. He didn't listen to what I said, and he just reshared it.
Mm-hmm.
And then his wife was like, what the fuck? And he's like, Shivani, I
Right.
didn't even listen to what you were saying. I
Yeah.
was busy running around and I just shared it.
That's hilarious. I love it.
Luckily, she likes me. Okay, it's going. 3, 2, 1. Ready? Don't be scared. Okay, guys. So usually we do this property pursuits live in my circle, but circle crapped out, and then we decided that we like Instagram better. So here we are. On the Instagram live, your audio is not as good. I'm sorry, but for the recording, it's great. Is it gonna work, Nicole?
Yeah,
Maybe.
it is gonna work.
All right.
Okay. So market update, but minus the fluff and more of how you could actually use it, right? So the big picture. Oh wait, Dave, introduce yourself to the Instagram people.
Hey, Instagram world. Dave with Real Broker. I've been with Real for, I guess, almost a year now, and part of this whole hockey stick curve with Real. It seems like there's a bunch of Real agents in Reno these days, which is awesome. I have only been in real estate for 2.5 years, which is like, why am I going to believe anything this guy says? But I've been in the trenches and I've been doing deals, and I'm just happy to be here. Anytime I get to spend time with Shivani is time well spent. We get to,
Push each other's
generally
buttons.
push each other's buttons. It usually gets pretty sophisticated, the conversation. Then we also talk a bunch of bullshit. So it's a good blend, I feel.
It's gonna be a good time.
Yeah.
But we're gonna move quickly. So the episode today is designed to be all the predictions we were making for this year and things that would happen from the economy to the real estate market, and what actually played out and what turned out to be a nothing burger. And by nothing burger, I mean things that take up a lot of news, like the NAR lawsuit, and then kind of fall flat, right? So the first thing for sure is interest rates, right? There's nonstop chatter about them when it comes to the real estate market. It never really dies down. And it's fair. They are a huge driver of activity, which we've seen in the last couple of weeks as interest rates have come down, mortgage applications have gone up, which could be the end of this little buyer's window. But rates are not going to be predictable, I think. And I think that's what we've learned. We were predicting that rates would come down this year because we have the current administration who's pushing for them very hard, but probably not Trump's favorite economic condition is that he's not in charge of interest rates. Even if he takes control of the Fed, which we'll get to in a second, the Fed is not the only driver of mortgage interest rates because, as you guys know, because you watch this every month, mortgage interest rates are driven by the demand for mortgage bonds. So that's a big part of the story. We're seeing that live right now. This week, interest rates went up a little bit yesterday because of inflation news. They're coming down a little bit today because of weak labor market news. I think that our early year predictions of a recession, I don't know. I don't know if it's going to play out. What do you think?
I mean, it seems more muted at this point, right? But the last that I've heard, and I'm not an expert on this, but when Powell came out a couple weeks ago in Jackson Hole and rates went down saying it's a weak labor market, that would be the biggest indication that maybe the economy isn't quite as strong as people think, right? What I do know is that people applying for a lot of these jobs, just anecdotally, there's like, it's hyper competitive, especially at a certain price, at a certain wage point.
The higher wage points.
The higher wage are like incredibly competitive, right? So
jobs that require like higher level degrees too. I'm finding like I have clients who are trying to move here. She's just gotten her PhD. The job market is not easy for her to find a job.
But I feel like things generally are just so, and I feel this, or you just feel pinched, right? It's this whole like I can't leave the house without spending $150 type thing that you see running around like social media. Like some of that's like kind of real. Even people that in theory have stable incomes and stable kind of a structure, family structure, home structure. Like it's, I don't know, like I feel more pinched than I have maybe in the last couple of years, and I feel with like, isn't credit card debt at an all-time high?
Credit card delinquencies,
defaults
exactly.
are way up. So yeah, I mean, in theory, it's like the dam feels like it like isn't breaking, but maybe close to doing something. There's some fissures, some cracks.
Then I would say what Dave is saying is that we were right when we were saying that there was going to be a recession this year, because maybe we don't see it in GDP, which is what's required, 2 consecutive quarters of slowed economic growth. That's what technically deems a recession. I think Main Street is feeling a recession right now. They're not feeling rich. I don't think the wealth effect is at play. And I think people are worried about their retirement. I think they're worried about their job prospects. They're worried about going to the grocery store. I think people are worried.
Right.
I think it feels like a recession on Main Street.
And the market is kind of this veil that goes over it that kind of makes people feel warm and fuzzy, just the stock market. But really, that's just a bunch of kind of
nonsense,
hyperinflated equity, in that is kind of BS,
Wait, that's something.
Yeah, so I don't know. That's going to be the thing that I think really gets people super nervous once that, or if that starts to, actually be on the downward trend. And I don't, again, that's above my pay grade, but that's just going to make people feel uneasy, because I feel people like think that they have X amount of equity based on their stock portfolio. They don't have a lot of liquid cash, but they're okay because they have this kind of as their insurance policy. Once that starts going away, I think people are going to generally pull back on their spending exponentially, which then is going to then lead us towards what?
A recession.
A recession.
Spot on. Because the wealth effect has actually been studied, and it's directly tied to stock market performance.
Yeah.
Well said, Dave. Okay, election drama to reality. We thought that the election chaos would break the market. It did cause a pause. There was definitely last winter a serious moment of freeze in the real estate market. And I don't know about every other market, but here we felt like people were just waiting until the election played out before they chose to buy or sell. Since then, though, people are buying and selling homes. And I'm seeing investor activity pick up as it became a little bit more of a buyer's market. I'm seeing sellers who are just sick of waiting and they need to move for family reasons.
Yep.
They need to move for lifestyle reasons. People are buying and selling homes even if a recession is looming. So I would say the election chaos didn't break the market.
No, but I would say, and again, some of this is anecdotally from my own experience, but this whole surge in the spring market that we usually see in Reno wasn't as
That was muted also.
yeah, I mean, it was muted, right? And I think this summer it wasn't crickets. There were things happening, but it wasn't anything else. And usually it's like March, April, May is just like this frenetic pace of transactions in Reno. And maybe you know more than I do, but it seemed like transaction counts were down, inventory was up, which has kind of led us to this part in the market where it's like, okay, like year to date rates are as low as they've been this year. Maybe they were a couple days ago. I don't know. It sounds like they've come back up, but that there is this like buyer trough, and all the buyers that are represented this summer were getting these unreal deals, right? But then some of this is like unreal deal means what, right? Like when you look at the data, I think, year to date houses in Reno are like up 1%. So the same house that sold last year, this year, this one sold for 1% higher, but it seems like it's a deal because that, all these houses that got brought to market this year, not all of them, were, 4 to 6% price too high. So with this like, haircut on price, we feel like we're getting these big buyer deals. But honestly, you look at the data, that same house, still 1% higher, I'm sure with multiple exceptions, than it sold the year before. So it's really interesting when you think about like what constitutes a deal. It's just different because we have more inventory than we've had since pre-COVID, right? It's the first time that we've matched those numbers. And so people have choices, but sellers were kind of overzealous, but still, it's not a terrible time to try to sell a house if you're realistic about the price.
Okay, you've made just like 5 really good points. So I hope I remember everything I wanted to touch on. There is price appreciation. So I think you pointed that out in a really like articulate way, in that home prices have not gone down. We have not seen like a median home price drop. We haven't seen that home values, like they're still forecasted to appreciate 4% this year in Washoe County. And as you're saying, we're not seeing that like prices have come down and there's this big market correction. We're seeing that you can't sell a home for more than it's worth anymore. The market won't tolerate that.
Yep.
The market's not going to tolerate 20% month over month or year over year jumps like it was in the pandemic. So it's the juxtaposition of where we just were that makes this feel like such a buyer's market.
Correct.
And I've explained on this podcast before that a buyer's market really doesn't happen until you have 6 months of inventory sitting. And the highest I've seen the number get is 4 months right now. Yeah. But that's a huge shift from in the pandemic when days on market was 7.
Nuts.
So that's why it's the juxtaposition of where we just were. But you're right. You can still sell your home and make money on your investment. And for buyers, my argument back to what you're saying about the deal is that the deals weren't made on price.
Right.
You know what I mean? Like people have sold the house for the same price but gotten a seller concession and a credit that they used to offset their mortgage payment, that they used to buy down their interest rate, that they used to subsidize their closing costs. So the recorded price was there, but the question would be, were the net proceeds to the seller as high as they have been in previous years?
True.
Which we don't have access to that data. I don't know that anyone's tracking that, but
anecdotally, yes, like not only were we getting big, cuts on price, but there were seller credits associated with that too. Like those were like, it was almost like, it was a double whammy, right? So, which helps.
The naysayers will say this is how the real estate industry is scamming you into thinking it's a buyer's market, but it's not a scam because buyers realized mortgage payments that were like hundreds of dollars less than they would have in a different market, and that moved the needle more for them than a price reduction.
Yep, that's right.
So I would say overall, instead of a market crash, what we've seen, truly, no bias, is that the real estate market is quite resilient. And that's why it's such a major driver of the U.S. economy. And I think it's why we will continue to see the government support the housing market, because they saw what happened in 2008 when they let the housing market crash, right? Then you fast forward to the next major economic event, which is the pandemic, and immediately mortgage companies are releasing forbearance options. Interest rates are coming down. There's options available to homeowners because they know what a key piece of our overall economy the housing market is.
Right.
And so even if it started to falter, I think you'll see a lot of assistance jump in very quick. And maybe the guy in the White House has a master plan, and that's why he wants interest rates lower, because he wants to make sure that the housing market pumps at all costs.
Right. Yep. especially new builds too.
There is a cost to that, though, and I went over it in the blog last Friday because I won't have time today, so you should check that out. Why someone who stands to make a ton of money from lower interest rates would caution against lower interest rates. Okay, Fed versus the Trump versus the Fed. So, have you been watching this drama play out?
Yeah, I mean, he fired one of the, governors, right?
He tried to.
Or tried,
She's
and then
suing
she
his
sued
ass.
him. So is her position, there's a stay with her position right now before it's resolved?
Yes.
Okay, yeah, interesting.
And
then
he wants to
obviously,
fire Powell.
Yeah, it seems like they have just a great relationship going on. Yeah, it's just,
I like calling it the Desperate Housewives of the Central Bank
it feels like it.
because there's so much bad drama here.
Yeah.
Like it's like a reboot of The Apprentice.
It's just a meme machine, which is great. I love it, right? But so the Fed meets what, next week or the week after?
Next week.
So what do you think is going to happen?
Or the week of the 15th. I think they'll cut. I think they'll
Like
do
a quarter
1%.
percent, you think? You think 0.5%?
I think they'll do a quarter.
A quarter, right? Which then is already baked into what y'all are.
We
already
saw that
doing, right?
pricing already.
Right.
Mortgage servicers immediately priced in that quarter point improvement.
So don't expect rates to do much, right?
Unless we
After
see
that.
they do a 50 basis point cut
Right,
or they give commentary promising cuts at the next meeting.
right. But better than last year where, it was what, was it a quarter or was it half in 2024 and rates actually jumped way up because the thought was it was going to be a full point, right?
Yeah. The
Which
market
killed the whole fall market last year. I mean, it didn't kill it, but it made it like extremely challenging.
people were butthurt for sure.
Yeah.
That's the crazy thing about the market, guys, is that it doesn't react to what the Fed said. It has already reacted to what the Fed alluded to.
Mm-hmm.
And it's it's speculating on what Trump's going to do. He's obviously very adamant about lower interest rates. Powell's job is, Powell leading the Fed, the central bank's job is to keep inflation under control without breaking the labor market. That's their only two things they're supposed to look at. And there's a lot of reasons why they need to be politically independent because the Federal Reserve is supposed to make decisions based on a 10 to 20 year arc and maintain long-term economic stability versus politicians who make decisions based on 2 to 6 year plans, right? So politicians love to sell lower interest rates because a stimulated economy is an economy that goes to the polls and votes.
Right.
But a stimulated economy is not always healthy. The Fed having such an active role in stimulating the economy is not necessarily a free market, which is interesting when you consider which parties want lower interest rates. But the Fed is not going to cut interest rates so far. Powell has not been replaced. He hasn't been fired. And he has not caved to political pressure. So my opinion remains as it was that the Fed will not cut interest rates if inflation is still a concern. And I think the tariffs are still making inflation a very real concern.
Yeah, I couldn't agree more. And it's the White House is continuing to disrupt things, which has kind of been their role, but that doesn't play well with markets like this, right? 'Cause
No, the
they have to
market doesn't like it at all.
Like it doesn't like the instability.
Markets love to be able to predict what's going to happen.
Correct, right.
They don't love wild card presidents, but we'll see. We'll see what happens. The higher for longer rate prediction turned out to be accurate. Now,
What is
jobs.
it supposed to be by the end of the year, though? I mean, and again, you don't have a crystal ball, but isn't it supposed to be continuing to kind of vacillate, but kind of on a downward trend to maybe to like 30-year conventional low sixes, like something like that, and then even maybe dipping into the fives in next year?
I'll make another bold prediction.
Am I lying to my clients?
I think we will see interest rates hit 5.99 for a conventional loan. They already have for FHA, for VA,
Sure.
for government loans. I think we'll see it before the end of this year. I think
Cool.
we will see 5.99 available on a conventional loan.
And that's important because there's a lot of people, right, that bet on this. And this is why you say you don't have a crystal ball. You can't overpromise and underdeliver with your clients, especially when it comes to this, because there's no control over it. But bought in late 2022, 2023 with the expectation that they were going to refinance, right?
Yeah.
And they're the ones that have been kind of, I wouldn't say screwed, but I think there was some overconfidence in the dialogue in the real estate industry that says you'll make 4 payments, you'll be able to refinance, rates are going this way, and they didn't do that, right? So hopefully at some point they will get to that area to where these people that maybe have a 6.8 or 7% interest rate, that they can at least refinance a little bit.
Okay, hear me out though. There's a piece of inflation that wasn't driven by tariffs and wasn't driven by politicians. There's a piece of inflation that was driven by Americans' inability to stop spending money.
Correct.
And I guess you could argue that went back to the stimulus checks, and so that what could be blamed on politicians and the Fed. But regardless, our generation has an obsession with keeping up with the Joneses.
For sure.
And there's a psychological problem here with the way people have spent money, and that kept inflation sticky even as the Fed jacked their rates at the most aggressive pace in recent history, and mortgage rates hit 8%. Like, it was painful what had to be done to get people to stop spending money. And to this day, they didn't stop until their credit cards and their HELOC was maxed until they couldn't make the minimum payments on these things. People kept spending money. So
people need to fly fish more is what you're saying. It's free. You don't need to buy things. Just go out on the river and go harass wildlife for a little bit. Sorry.
Many people would come to me and say, I don't want to be house poor. And at the beginning of my career, I would look them dead in the eyes and say, I know, I don't want you to be house poor either, because if you hate your mortgage payment, you're going to hate your house very quickly. Now, I think that making people house poor, in some cases, is actually the best thing I could do for them.
Add some frugality, right?
Because at least they're spending their money on something that is building their future.
Correct.
That's gaining them amortization and appreciation gains. If I stop them from going to that 3rd, 4th, 5th music festival this year, I actually don't feel bad. And I stand by that.
I would posit that's gray area right there. Music festival is pretty fun. Like, that's an experience. Like, I mean, experiences are valuable. Things, though, we don't need more things. Okay.
Except unless it's a house.
Unless it's a house, yeah.
Because
exactly.
that is your safety net. And if all shit does hit the fan, like it did with the pandemic, homeowners had an advantage because they could put their mortgage on hold. And they didn't get kicked out, and they had control. Moving on. The CFPB. Will it even continue to exist? Are you familiar with the CFPB? Consumer Financial Protection Bureau. So the CFPB was born out of the housing crisis. And Dodd-Frank was, the big bill that was passed to regulate the mortgage space. And I think it was mainly a pile of shit because the only people who benefited from it, homeowners did not become more protected. Lobbyists made a lot of money because banks had to hire them to help them figure out how to implement all these new regulations. I still think as a buyer, you have to find a lender you trust and then trust them. Otherwise, you could end up in a sticky situation.
So this is one of the, remind me, it's a senator from Vermont or something like that, who's
talking about getting rid of the CFPB?
No, that she's emphatic about keeping it, right?
I don't know about her.
Okay, sorry. Anyways, yeah, sorry to sideline us, but so are you friend or foe of it? Is it because it sounds good, right? But is it?
Well, they've made some big promises this year.
Okay.
So if Trump gets rid of the CFPB, does that mean your medical collections go back to being reported? Because the CFPB was the one who said we don't need to report medical collections to your credit score. The CFPB is the one trying to regulate these buy now, pay later programs that, dude, billions of dollars were spent on buy now, pay later programs just in November and December for Christmas gifts.
Crazy, right?
Like billions.
Yeah.
There needs to be some regulation on spending, and I think the consumer does need protection because I don't think that it's mortgage lenders who are out to get them. I think it's predatory student loans, personal loans, buy now, pay later. These things do need to be regulated.
Yeah. Visa, Chase, MasterCard. They were just at a hearing, I think, a couple of weeks ago and got grilled pretty hard by maybe the Budget and Finance Committee or something like that.
Really?
A lot of the big heads of those credit card companies, for being, kind of called monopolies and, making a little bit too much money. Again,
they are
it's
making
everything, right? But it's like, well, consumers need to stop spending so much money on stupid shit, right? That's what feeds these big companies. The companies could probably be a little bit better in terms of regulations,
profit margins.
Yeah, and profit margins that don't screw people. But it's a both and.
We don't have time for that right now, Dave.
That's a whole nother podcast.
Yeah, that's a whole nother show. Okay, so real estate right now. We're getting to the end here. How are you doing?
Hanging on by a thread.
Okay. I was not expecting you to say that. Usually people, if they were nervous, Dave wasn't really nervous, but if they were nervous to come do this, by the end they're like, thank God it's almost over. Like you see them like breathe a sigh of relief. I thought you'd say you were having fun.
No, I am having fun. That's good.
Okay, so real estate right now. Buyers are using the buy downs, which we kind of already covered. I think creative financing has been a major winner. People don't know about it. People don't follow. Not everybody follows Pace Morby for a variety of reasons. But like subject to financing, seller financing, we saw a lot more of that. We saw a lot more of everyday Americans using that stuff. And I think they should continue. Like, I don't get to do the business, so it's not the best story for me. But however you want to make homeownership happen, I'm going to get behind. A strong economy is going to remain in quotes because I don't know that America is being made great again or great at all. I think the labor market is the strongest testifier to that. You know, we talked about that the Fed wasn't going to bring down interest rates, and then we immediately jumped into my prediction that interest rates will come down, and that's because of the labor market. I think that we will inch closer to a job loss recession, and in uncertain economic times and times of recessions or recessionary factors, if it doesn't get called a full-blown recession, the demand for mortgage bonds increases, and that will bring down borrowing costs naturally without the Fed pulling a lever. But then the Fed may also pull a lever simultaneously, and then we see borrowing costs fall fast, which is why I think it's possible that we get the 5.99%. But I just took a strong detour from the quote unquote.
Just real quick, I mean, but just as a guy who kind of doesn't get this stuff, like if people don't have jobs and don't have income, who cares what interest rates are? They can't qualify to buy a house. So like, isn't there this like a little bit of a chicken and the egg thing going on?
What happens is this is why you see a separation or elimination of the middle class in a recession, and the wealthy get wealthier.
Right.
Because
mainstream, all these deals, they have the money, they buy up all the good deals, right?
And right now we are still seeing we're only beginning to see the higher income zip codes be impacted by what has been the economy, a difficult economy for a few years. We're starting to see credit card delinquencies happen more in high income zip codes. I don't know why they track it by zip codes, but that was the data I got. So I do think we're starting to see six-figure earners. One, six figures doesn't make you feel rich right now, but we're starting to see six-figure earners in more pain. But the people above them who are wealthier are the people who will buy a bunch of real estate using lower borrowing costs.
Totally.
There are going to be the people, like there's been 5 first-time home buyers that I've helped in the last 2 months get 3-2-1 buy downs and qualify to get into homes that they wouldn't have if they weren't paying attention.
Right.
So there's opportunity out there where it doesn't, for the middle class, but the majority of the middle class will be frozen by the sphere that's being pumped into the headlines, and they won't do anything.
Right.
And that's part of the reason they get eliminated.
And headlines have like a big impact on this stuff. It's crazy, right? I mean, part of our job is like not to dispute headlines. I mean, headlines are headlines, but to show that, it's not so doom and gloom. There is a pathway, but a lot of it, I mean, I read the headlines every morning, and you have to kind of like articulate some of this stuff. If you know enough about it and you're in it, it's not all fake news. And I'm not saying fake, but like some of it is hyperbole and some of it is just to sell news stories, right? And you have to break it down to people and say, look, like that sounds bad. It's like there are elements that are like factual about that, but here's where we could go, and you're actually not priced out. And like, let's find your own way to make this happen. But you're almost fighting some of this sometimes, or sometimes I even use it just as like a reason to reach out to clients to talk about these things, right?
I love that. I love using the headline as a reason to reach out. It's the reason we started this podcast was because the headlines became so disconnected to the reality of what was happening in real time. And that's why we wanted to put the show together for you guys and show up every month, is because there is a very real and true disconnect. And it's not always that the headlines are fake, like Dave is saying. You're spot on. They're just sometimes not telling the whole story.
Exactly.
And the way journalism is designed now, we have a major problem with the media interest, which is also not we don't have time for that today. But a news story is 90 seconds. They cannot break down for you the whole story in 90 seconds. No. And if you're going to read it in the Wall Street Journal, sure, they can get into more of the specifics, but the average American is reading the headline in the first paragraph.
Exactly.
And that's it. That's all the news they're getting. And so it's a broken system, and it's why we'll continue to show up with this podcast. Bottom line, before I do the bottom line, tell people how to find you on Instagram.
So I was the Nevada agent. I'm now in California and Nevada. So I changed. Nobody cares, but it's the Sierra Nevada agent, right? So more of this like amorphous kind of region that representing. But yeah, so the Sierra Nevada agent, and yeah, follow me if you want to buy or sell in Truckee or Reno, Incline, South Lake, anywhere. Call me.
What's your website?
Website is nevadaagents.com, and it's going to be switched over in the next week, so this is totally moot, but sierranevadaagents.com.
You guys...
and Real is amazing. Come over to Real. Real's like the best brokerage in the world. Yeah, trust me. I'll give you the 5-minute pitch over coffee, and yeah, it's literally like handing somebody like $100 bill. It's an easy sell to come over. So...
Okay, but I have to bust your balls now, because if your brand is the Sierra Nevada agent and someone goes to Google...
I should have quoted you. Yeah, I should have.
Sierra Nevada agent.
Yeah.
How many people are going to come up?
So this is...
You want them to just remember Dave last?
This is another like either podcast or, this is really... I want Shivani to coach me. So talk about like being, I noticed being a little pinched with money. I'm going to be more pinched because I'm going to hire her as a coach. But yeah, like SEO and retargeting and all those things, which Lee Stevens is so good at. And these really high performing agents and teams are really good at. I do none of. So I'm all word of mouth. So, a little bit old school, but could I up my game? And is that a problem? For sure. So
I will help you.
Thanks for pointing that out.
I will help you, and you don't even have to pay me.
Okay.
Because you need the help.
I need help. And if you help me, I help you.
Yeah.
With new buyers.
I love it. Okay, guys, bottom line. Early 2025, it was a lot of uncertainty. Late 2025, I believe it's the same. It's more of the same. It's uncertainty. And you cannot try to time the market. I don't know how many times I say this to people. Trying to time the market is like trying to catch a falling knife. I do think there's an opportunity to be had right now, and I do think you should be paying attention, and I don't think your strategy should be dependent on interest rates. I think you need to recognize two things about the real estate market: how resilient it is, and hopefully we proved that to you today in going over all these trends, because the real estate market has persevered through all of them, and there's opportunity to be had right now.
Yeah.
For both buyers and sellers. So, I don't know. It says mic drop moment. I don't know what it is. But I think there's opportunities out there for those who are paying attention. And it doesn't really matter if they're in this class, that class. You can skip this elimination of the middle class that's about to happen if you pay attention to the opportunities that are being presented.
Yeah, I agree. I think it's going to be a really good fall market here in Reno, honestly, for both buyers and sellers. And remember, it's not all about just the deal. Your brother talks about this quite a bit. Like, there are so many other subjective reasons to buy and sell a house, and we can't forget those things, honestly. Like, just quality of life, you're doing other things, whatever, it's like, just remember, this is like a big mural that we're like painting, and price and like how great of a deal I got is like one little brushstroke. It honestly is. So
that is such a good point, because we talk about the things that we can measure, which are appreciation and net proceeds and your monthly payment and your cash flow. I don't talk as much about the things you can't measure, but they're real. And
they're real.
The stability and the peace of mind and the security for your family are a huge part of it.
Yep.
And there's so much fun to be had in making a home your own.
Mm-hmm.
There's so much fun to be had in building a real estate portfolio, not being owned by the man anymore.
Right.
So I think that was a great point that you threw in here. We will invite you to come back for that sole reason.
Yeah. You want to talk shit about BlackRock? Is that what you want? Just kind of fight the man?
We did that with Trevor Richardson.
Oh, you did? Good. Okay.
He fully schooled me live.
I'm not well equipped to talk about it, but yeah. So
it was a fun one.
Yeah, I bet.
We'll see you guys next month on Property Pursuits. In the meantime, you don't have to wait every month. Dave puts out content. I put out content daily on Instagram. You can find us there. Or you can subscribe to my Friday update and sound smarter at happy hour. See you next time.